Good morning, traders. Manny Cabrera here, co founder of MDC Trading Academy, with today's pre market forecast for Friday, May the 15th. Let's quickly jump to our news items. As we normally do on Friday, we have core retail sales coming at 8:30, and we have prelim UOM sentiment. This is going to be an important reading on our first look at consumer sentiment or consumer confidence. The big one is going to be coming, I think, in the week of the 24th, 25th, right around there. That's going to be a big one so that we can see where the American people stand in reference to their opinion on which direction the economy is going to be going. Let's jump quickly to our analysis charts here. We begin with our daily chart here. As we can see, market continues to churn between these two key areas here. Remember, we had talked all week, the last couple of weeks, about the break above the 20 SMA, how it's holding support, and it's bouncing off the 80 SMA. Remember, the true resistance of this market remains the 200. That's the key number there. The 200 is a very key number there. Now, market has broken below it. They closed below on Wednesday. And yesterday also closed below, but right on top. We had a very long bar to the downside, but the market recovered quickly on high volume. So we've had two back-to-back volume days, one to the downside and one to the upside. We're opening up a little below the SMA today. Now, we do have the support level here, and we do still remain resistance here. So the market is churning between it. I told you that the market was going to be doing this for the next several weeks because the market is looking for a reason to either run up or to break down. Now, why? Simply because it's already digested a lot of the information that's been coming through, a lot of the negative reports from February, from March, and from April. All of those bad news reports that we've been receiving that are actually quantifying the effect of the shutdown of the economy. That's been happening. The numbers have been getting better. Our unemployment numbers, yes, they were a little higher than expected, but still lower than what we were. But on top of that, now we're going to start seeing as the country starts to reopen and states and counties start to reopen, we're going to make sure, keeping an eye, the market is keeping an eye on any surge and new cases, so on and so forth. So that's what the market is kind of looking at right now. So, okay, so we saw we expected the bad news. We heard all the reports of the bad news. Market took the big tumble. Now the market is recovering on the fact that it wasn't as bad as expected. It is bad that people are dying. Please don't misunderstand me. I'm talking about the market psyche. The market psyche. We were expecting the world to end. The world hasn't ended. So therefore the market reacts positively to it. Now we're at the level that we're measuring. Okay, now how long is this going to last? Are the reopening of the economy, what kind of an effect is this happening on our economy? That's where we are right now. That's why we have so much indecision in this area here. Now, again, we have to understand this is going to take it's going to take time. We don't know whether it's going to take months. We don't know what it's going to weeks. We don't know exactly how long it's going to take. But we understand that we're going to be churning here for a little bit. Now, can the market break down and come retest down here? Absolutely. There is no doubt about it. But can it also break above this and continue to the upside? Absolutely. Right now, the jury's out. It all depends on the number of businesses that are able to reopen, see how many businesses can survive, and the effect, obviously, of all of the stimulus that Washington and the Fed are implementing in order to maintain or jumpstart the economy. So that's the fundamental view with a little bit of technical stuff in there. That's why we have support and resistance there. Now, in reference to trading, in reference to our trading and where we're going with this, as you can see, market has clearly broken through very key areas that we have been marking for a long time. I kind of lost a lot of my analysis because my charts got destroyed. I don't understand what happened. So I had to rebuild a lot of it. But nonetheless, big resistance, giant support. That's where the market is moving right now between these two areas. Logical areas for the market to come retest if the market wants to move lower is this level here at about 27.72, right around this area. We're talking about areas, not specific prices. So that is a potential, or it could potentially just market just found a bottom here, temporary bottom for a continuation up. So we're kind of in the midst of this mixed market, which is what we have been talking about for the last several weeks. But we don't trade these charts. These charts are just giving us more and more information in order to start building our hypothesis on what it is that we want to be able to do in the markets. Now let's look at a closer time frame to our trade chart here so you can see it a little bit closer here. Here we go, right here, and here we go. That's yesterday's close there. The dark gray is our pre-market. We're coming off the intraday high from yesterday. This is the intraday high that was established late yesterday. Market attempts to continue, make a little higher, retraces a little deeper, creates a higher high, returns deeper, and it runs up. So we do have an intraday higher high in our pre-market, but the market broke down through it again. Now, plenty of support to this level here. Remember, if the market wants to really move down, this is our key area down here, which is our pre-market, our intraday low from yesterday. So that's a place that the market can potentially run to if it wants to move higher, lower. But remember, the market has been essentially oscillating between areas. As a matter of fact, I wanted to show you this at this time frame so you can see how the market is pretty much oscillating, you know, between these areas here. It's a huge oscillation. It was there before, came up, hit the bottom, came up here again, hit the bottom, and now it's attempting to hit back up here. It's having this particular move right here. Now, is this going to hold here and the market move lower? Because this will be a different activity that we've had in the previous, or is the market going to hold here and move up? So that's why we have a lot of mixed action. That's why, friends, the old adages in Wall Street never go out of style. The trend is your friend. The trend is your friend. So keep your eyes open on the trends. So as far as trading today, again, we're below this serious support and resistance area after the run up. Market clearly breaks through, and now market is hitting this bottom here. Market is creating a smaller bottom here, right here from this section here, a previous strong support level. Market is bouncing off there, but don't keep your eyes open, obviously, for the break to the downside from there and the potential run to, let me just get this straight here, to this intraday low. Okay, so that's the target. Obviously, if the market wants to break through this particular support level, this is our target. So between here and here, we're looking for short. Anything that breaks above this particular here and starts to head up, we're looking for long. So you got to play the runs in the direction that the market is showing at the moment. So easy, take it easy today. Watch the deeper retracements. Place your stops. Have a great weekend. Let us know if you have any questions. Take care.